With great power comes great responsibility. NVIDIA managed to save the day for the Wall Street once again. Very good morning to all. I'm Kelvin here. Welcome back to today's Daily Dose of Market Insights. Today will be the Thursday, the 20th of November 2024. 2025, pardon me. So before we jump into the gist of today's Daily Dose, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is for general information purposes and it's not investment advice. Past information is not representative of future results. All right, so as usual, before we jump straight into the full suite of the daily dose today, which are covered all the intraday, latest intraday update on the broad-based cross-asset classes ranging from the major FX pairs, the major stock indices, and the two commodities market, which is gold XAU/USD and the West Texas crude oil. Let's have a recap what has taken shape yesterday in terms of the relevant news flow / events that has an impact on the intraday movement of these broad-based cross-asset classes. So let's start with the major US stock indices first. So as we know that yesterday is a pivotal moment for Wall Street. Why? Because we know that prior to the earnings release early this morning at 4:01 a.m. Singapore time, the Wall Street major benchmark stock indices are very wobbly as since last week they started to tumble and challenge the respective 50-day moving averages. And what's interesting over here is that all of them managed to survive yesterday, which I covered in my daily intraday technical levels on the US Wall Street 30 that's representing the Dow Jones Industrial Average, the US SPX 500, the US Nasdaq 100. We are very hesitant to actually flip to a bearish bias, despite the fact that from Monday to Tuesday, they are actually sliding downwards. Okay, later I'll show you the reason why, because of the chart of NVIDIA. And what's interesting over here is that before the release of NVIDIA earnings yesterday, the major US stock indices managed to find support at the start of the US session and traded higher by the close of the US session. So all three major US indices, with the exception of the small cap Russell 2000, closed almost unchanged, negative 0.04%. But the Dow Jones managed to add a modest gain of 0.9%. The Nasdaq 100 mega cap technology, the Nasdaq 100, which has a higher weightage on NVIDIA, managed to outperform 0.56%, and the SPX trailed slightly behind at 0.4%. And what's interesting in today's Asia session, the E-mini futures of the S&P 500 managed to stage a stunning rally of 1.25% at the start of today's Asia session, and trading at this session high as we are speaking right now, followed by the Nasdaq 100, which managed to rally up by 1.8% as we are speaking right now. So these are the E-mini futures that are trading right now during the early Asia session as we are speaking right now at 11:05 a.m. Singapore time. So the reason why this risk-on feedback loop has crept back into the major US stock indices, because all thanks to the savior NVIDIA. So NVIDIA reported a rather stronger than expected revenue, and also Jensen Huang, he also gave a very rosy revenue forecast for the next upcoming quarter in Q4. So Jensen Huang says that NVIDIA current generation GPU called Blackwell are off the charts, and he expects 600 billion in sales in the current quarter, which is Q4, versus 1.43 earnings per share, which is higher than the median revenue expected by analysts in Q4 at 61.66. And in the current third quarter, earnings result also managed to beat expectation, $1.3 adjusted EPS versus 1.25 estimated, revenue coming in at 57.01 billion versus 54.92 billion estimated. So based on this revenue and earnings beat, and as well as a rosy Q4 earnings upgrade or earnings forecast by the management of NVIDIA, that created a positive feedback loop into the ex-post earnings share price of NVIDIA after the close of the US market. So this is the after hours trading session where NVIDIA managed to rally up to add up 5.10% after closing in the US session at 2.85% positively yesterday. So if you look at the chart of NVIDIA again, for those who actually followed my daily dose yesterday, the reason why I was very hesitant to have a bearish bias on the major US stock indices because NVIDIA at the end of the US session on Tuesday managed to survive at a key medium-term pivotal support at 1.83 slash 177.70, and also the one of the important we call it stock-centric momentum indicator that I use to monitor will be the chunky money flow index that has managed to rebound sharply from a 15-month low since 6th of November, and right now it has managed to inch up above the zero center line mark, inching back up to a positive level at 0.02, so indicating that positive price momentum and positive volume momentum as well, given the fact that chunky money flow is very similar to RSI, except that they add in volume reading. So it's a derivative of price action and volume. So given this chunky money flow index has started to turn positive before the earnings results release, so that's the reason why yesterday's technical chart of NVIDIA doesn't justify a bearish bias on the major US stock indices. All right, so as if you look at yesterday close at 186, so if we switch to the hourly chart in trading view, we are able to see the after hours price action as it inch up higher by 5% over here. If looking at the Google, yeah, it's high by 5.10%, and right now the after hours price action is at 1.9595 195.95 versus 186.52 based on the official close of the US session yesterday. So a net result over here, positive feedback loop into the major US stock indices, and that also created a positive feedback loop back into the Asia market as well, where yesterday we still remains bullish on the Nikkei 225. You could remember why, because the Japan 225 that's representing the Nikkei 225 managed to sit exactly at its respective medium-term pivotal support. So later we'll revisit the chart again. So the Nikkei 225 is up by 3% as we are speaking right now. The Hang Seng Index a bit lackluster, up by 0.2%. And the CSI 300 is up 0.08% as we are speaking, which is the benchmark A shares index. And going into the rest of the other Southeast Asia benchmark stock indices, the STI managed to up 0.11%. The ASX 300, the ASX 200, pardon me, managed to inch up higher by 1.31%. Then across the board, we also see positive performance on the Malaysian KLCI up 0.21%, the Indonesia benchmark stock index up 0.89%, and the Thailand set up 0.74%. So net overall is a positive intraday risk on across the board in the Southeast Asia, and the two major Asia Pacific benchmark stock indices, three of them, in fact, the Japan Nikkei 225, the Hong Kong Hang Seng Index, and the China CSI 300. So nevertheless, yes, we start to see a rebound in the US dollar, but this rebound in the US dollar doesn't create a negative feedback loop into the Asia Pacific stock indices, because thanks to NVIDIA being the rather key sentiment driver of the current risk on sentiment that is spilling over to the rest of the global stock indices in Asia as we are speaking right now, because given the fact that in the last 3 years, the rally in the US stock market has been driven by AI optimism, and we know that the biggest general in AI, or the biggest big brother in AI, is NVIDIA. So whatever the faith of Wall Street lies solely on one stock, which is NVIDIA. So as long as NVIDIA didn't collapse in terms of earnings growth prospects, translate to a positive feedback loop into the share price of NVIDIA, that potentially could keep the medium term and major uptrend phase of the major US stock indices intact, translating into a positive risk on impact on the rest of the other global stock indices in general. All right, so now onwards to the FX market over here. So over the FX market, we start to see a bounce in the US dollar index, driven by three relevant news flow / events we're going to share with you very shortly. So, but before that, let's take a look at the US index first. So the US dollar index goes to pierce up above the 200-day moving average, all right, and this is the first time it managed to close above the 200-day moving average. So this is the daily chart of the US dollar index over here. So you could see the US dollar index yesterday closed above the 200-day moving average for the very first time, all right, since breaking below it on 5th of March this year. So that created a intraday positive sentiment back into the dollar, as it's now inching upwards towards the upper boundary of this medium-term sideways range resistance at 100.54 over here, this level over here. All right. So now with that, if you look at the intraday chart of the dollar against the major currency, so this is the 5-day rolling performance of the US dollar against other major currency as of 20th of November. So we see very clearly the yen and the Swiss franc is greatly weakening over here. All right, so later I'll share with you guys, especially the dollar yen, why the dollar yen is so strong right now. All right, so means the yen is weakened very significantly against the dollar. So now let's start with the dollar yen situation over here first. So the dollar yen, there's actually two relevant news flow that has causes the dollar to strengthen very strongly against the Japanese yen. So this is the strongest level since February, since January this year, or I would say. So trading to a high of 157. So there was a big rally of two big figure yesterday from around the 155.50 level. So now it's trading as 157.41. So the reason why the dollar yen strengthened so strong, that means or the yen so weakened, because there was a meeting yesterday between the current Bank of Japan Governor OANDA with the new finance minister. And after the meeting, both of them issue kind of a public statement saying that the finance minister reaffirms joint accord with BOJ OANDA. So what it means that joint accord, it means that Bank of Japan will work closely with the current administration in Japan, okay, rather having a independent view. All right, so what it means over here, the finance minister and central bank governor reaffirm a joint accord aimed at overcoming deflation and achieving sustainable growth. And we know that currently the current Japanese administration, led by the new Prime Minister Takachi, which is a prominent of or a protege of the former late Shinzo Abe Prime Minister, who advocate rather accommodative policy in terms of fiscal expansion, accompanied with loose monetary policy. And given this joint accord that's being agreed yesterday between Bank of Japan governor and the new finance minister, that lead to a market implication or market implied that the Bank of Japan may not be rising interest rates so soon, given the fact that we know that 2 years ago the Bank of Japan is on the path of gradually increasing interest rate in Japan, given this joint accord that has been agreed yesterday between the Ministry of Finance and Bank of Japan. And also after this joint accord, we call it a statement has been released, there is also a news flow by this panel, a member of Japanese Prime Minister Takachi Economic Growth Strategy Panel, said that the central bank, Bank of Japan, isn't likely to rise its benchmark rate before March. So that actually greatly reduced the swap market betting odds that Bank of Japan may not be rising rates in December meeting, the last meeting of this year. So that causes the dollar yen to spike up yesterday. And also on the European front as well, we also start to see the UK core inflation data that came in within expectation over here. Let me share with you guys. Yeah, core inflation came in within expectation, which is softer than the previous month print, the previous September month print of 3.5% year on year. So October it came in at 3.4%. So that also giving much more evidence that the Bank of England could do another interest rate cut in the upcoming meeting in December. So that created a strong push in the US dollar, and the stronger push in the US dollar came during the US session yesterday, where we start to see the release during the middle part of the US session at this 2 a.m. pardon me, 3 a.m. Singapore time, where the US Federal Reserve FOMC minutes in the previous meeting indicated that many officials lean against a December rate cut over here. And given the fact that we know that in last week, there was actually a remark made by the US White House administration that they may not release the October non-farm payroll data and the October unemployment rate data due to the recent government shutdown. And this has been reaffirmed yesterday, as has been confirmed by the White House, that they indeed will not release the October data, non-farm payroll data. So it was stated over here. Give me a minute where it was. Okay, there was a paragraph over here. Let me search the paragraph. Where is it? Give me 1 second, very quickly. Yes, on Wednesday, the government cancelled the publication of the October employment report. That means no release of the October non-farm payroll data because some data couldn't be collected during the shutdown, and scheduled the November data to be released later on December 16th after the FOMC final meeting of the year. So the FOMC will meet on the 10th of December, but the next available employment data, official one, will only be released after 10th of December. So that actually potentially cloud the decision-making process of the FOMC members during the 10th of December meeting, because they don't have any form of the lack of official job data to actually justify for a rate cut. So that actually reduces the betting odds by the Fed Funds futures traders as tabulated by the Fed Watch tool, and the 25 basis point cut has been greatly reduced, the chance of it in the December meeting, to 33%. So previously at the start of this week, it was slightly about 47, 46% over here. So previously a day ago, it was 50%. And a month ago, it was near certainty at 94%. And that 25 basis point cut in the December meeting, or the third cut for this year, has been greatly reduced to 33%. So that causes the dollar to rebound significantly intraday yesterday as well over here. All right, so that sum up the first segment of the daily dose. So let me now move on to the second segment, which is the intraday technical outlook on all the broad-based cross asset classes, starting with the FX market first. So with that, let me expand my screen so that you guys have a better view of the charts over here. All right, so let me take a sip of water first. All right, so let's get started, starting with the FX market. Okay, let us start with the euro dollar. All right, so the euro dollar broke down below our short-term pivotal support level that we have yesterday at 115.30. So totally invalidating that minor bullish reversal scenario that we initially expected towards 116.15. And right now, it has now shaped this bearish moment as we are speaking right now. So with that, I'll be using any rebound as long as this rebound remains below 115.70 short-term pivotal resistance for today. We'll flip to a bearish bias for the euro dollar to expose the next near-term support level at 114.95, 114.75. A breakdown below 114.75, which is the minor swing low of last Wednesday, and as well as the previous Wednesday, and not last 2 weeks ago at 5th of November, and pardon me, at 5th of November and 6th of November. This level, if it breaks down, it may expose a near-term support level at 114.50, which is the 0.764 Fibo extension, very closely taken from this ongoing corrective decline that has been in shape since 17th of September, and 114.50 is also the minor congestion area of 31st of July this year. Only a bullish breakout above 150.70 will invalidate today's bearish bias to see a squeeze up towards 116.15 again. So that's for the euro dollar. Next up will be the sterling pound. So the sterling pound, yesterday we were neutral. It broke below the neutrality limit and validated our bearish bias view. So right now I'll be using the lower neutrality limit as my short-term pivotal resistance level at 130.95. So any bounces that remains below 130.95, we will have a bearish bias to revisit the next intermediate support level at 113.15, 129. 90, a breakdown below 129.90 exposes further weakness towards 1.2930, which is the 0.618 Fibo extension taken from this ongoing minor slide that has been in place since the minor swing high of 17th of October, and 129.30 also confluence with this graphical former minor swing high of 7th of October, broken up, now turns into a minor pullback support area. All right, so this was over here 7th of April this year, pardon me. All right, so that's will be the sterling dollar flipping to a bearish bias below 130.95. Only a breakout above 130.95 will invalidate today's bearish bias view to see a squeeze up to retest the 20-day moving average and the upper limit of this ongoing descending channel resistance taken from the swing high, the medium-term swing high area of 18th of September at 131.95, 132.15 level over here. All right, this zone. All right, so onward next will be the Asia Pacific currency, starting the Aussie dollar. So the Aussie dollar fares a bit different. I managed to stage a bounce right off the 200-day moving average, which is also our short-term pivotal support level yesterday at 64.67. So the reason why the Aussie dollar managed to bounce, because the Aussie dollar is a proxy of risk on, risk off. In a way with global indices. So if we start to see a sell-off in the global indices, especially the US stock market, in the last 2 months or so, we start to see a rather weak Aussie dollar. But if the US stock indices manage to bounce, the Aussie dollar also managed to stage a bounce as well. So given the fact that there is a macro factor at play right now, that kind of negated the US Federal Reserve rate cuts bets reduction in the December meeting. So that actually explains why the Aussie dollar managed to be so resilient in yesterday's US session and as well as today's Asia session as well. So with that, we will still maintain that minor bullish bias within this sideways range configuration that has taken shape since the minor swing low of 5th of November, given a bit of excess of yesterday at 64.60. So using 64.67, excess at 64.60, short-term pivotal support level, we will still maintain that mild bullish biasness within this minor sideways range configuration that has been in place since the low of 5th of November this year. Intermediate resistance level or upside trigger level will be at 64.90, all right, which is the high of yesterday's US session at the start of the US session, 0.6490, 6490. A breakout above 0.6490 will see it will increase the odds of a push up to revisit 64.25/64.40 over here. Only a bearish breakdown below 64.60 will invalidate today's mild bullish bias to see a further slide to retest the medium-term pivotal support zone at 64.60/64.30, which is also confluence with the expanding wedge range support that has been in place since the low of 23rd of April 2025. So that's for the Aussie dollar. Next up will be the dollar yen. So dollar yen continues to remain rather strong, and right now it's fast approaching this major resistance level at 158.35, 158.30, which is the 10th of January 2025 high that kickstarted this previous multi 1 month 4-month plus of decline this year, and also previously that level also ignited BOJ intervention in July 2024 under the instruction of the Ministry of Finance at that point in time. So on a very short-term basis over here, yesterday we flipped to a neutrality stand, and it managed to clear above the upper neutrality limit and hit the resistance level at 156.50/156.70 area over here. So with that, the RSI is at the overbought level, so far at the overbought level right now, but no bearish divergence over here. We could see price actions doing similar higher high on the RSI in line with the higher high on the dollar yen. So given this rather extreme overbought level that is higher than the previous overbought level of 30th of October, there could be some form of a minor pullback taking shape in today's session at the start of the European session. So first support level to watch in this minor pullback will be at the 15685 level. So that is the start of the Asia session, and the key pivotal support will be this former ascending wedge range resistance now turns into a pullback support at 155.90. So in between over here, there might be various whipsaw that taking shape. So I do not want to tighten my pivotal support level to be so high above 155.95 because there is no clear graphical support above it, all right, other than one straight line up that we see recently, that we see yesterday. So as long as any minor pullback that's managed to hold above 155.95 short-term pivotal support, so we'll be looking at weakness to flip to a bearish bias as long as it hold above 155.95. The next resistance level to watch in this push up will be at 158 figure slash 158.35 level. Only a bearish breakdown below 155.95 invalidate this push up scenario on the dollar yen to see a reintegration back below towards 155.25, followed by 154.85 next, which is this week low or this Tuesday low at 154.85. We also confluence very closely with the trend line support level that I drew from the low of 29th October this year. So that's for the dollar yen. All right, so let us now proceed to the stock indices. All right, starting with the Asia Pacific one with the Hong Kong 33. So the Hong Kong 33, we flipped into a neutrality stand yesterday. So neutral between 26.045 and 25.7640. So there's some positive development that's taking shape right now. What we could see is that the price actually managed to bounce off this minor ascending channel support level that has been in place since the low of 10th of October. The hourly RSI has started to shape a bullish divergence by shaping a higher low at its oversold level, whereas price action traded yesterday with a lower high as it's played around with the lower limit of this minor ascending channel. So with that, we will flip to a bullish bias using the lower limit, yes, of the neutrality zone as my short-term pivotal support for today, 25,760. Upside trigger level will be at 26,045, which is indeed tested at the start of the Asia session today. So a breakout above 26,045 will increase the odds of a recovery in first step towards the next intermediate resistance for today at 26,310, which confluence with the 50-day and the 20-day moving average. Only a bearish breakdown below 25,760 will invalidate this minor bullish recovery scenario to see further weakness towards 25,500, which is the minor swing low of 23rd of October and 5th of November. A breakdown below it will see a further push down towards 25,180 next. So that's for the Hong Kong 33. Okay, next up will be the Japan 225, representing the Nikkei 225. The Japan 225 pierced up and almost hit our resistance level, the second resistance level at 50,730. So with that, we will tighten our short-term pivotal support level to 49,085, giving that it now price action managed to indeed bounce off the medium-term pivotal support that we have yesterday at 48,450, which confluence with the rising 50-day moving average as well. So using any dips or pullback, first resistance level towards this first intermediate resistance zone over here. Give me 1 second, let me put it in writing. Okay, at 49,800, 49,470. So as long as this will be my first resistance zone, as a first support zone for the minor pullback, given that the RSI is now at the overbought level. All right, over here, as long as this minor pullback is surpassed below my Titan pivotal support level, which is my short-term pivotal support level at 49,085, we'll still maintain that bullish bias above 50,730, potentially take us up higher towards the next intermediate resistance, which is the minor swing high area of 4th of November at 30th of November at 51,530. However, a price break below 49,085 that would negate today's bullish bias to see a further slide to retest the medium-term pivotal support level that managed to survive since this week at 48,450. All right, so that's for the Japan 225. Onward next will be the Germany 30 over here. So the Germany 30 managed to bounce, but this bounce managed to stall at this moment in time at the pivotal resistance that we highlighted yesterday, which is so the 200-day moving average as well, 23,450. So with that, we will still watching 23,450 as my short-term pivotal resistance level. Yes, we will still maintain that bearish bias, but downside trigger level to watch out for today will be at 23,200, all right, level. 23,200, which is yesterday's European session, yesterday's US session low. Okay, 23,200. Okay, a breakdown below 23,200 will increase the probability of that bearish bias to revisit 23,030 next, which is this minor swing low area of 19th of June this year. Only a bullish breakout above 23,450 will indicate that the previous bearish push down on 18th of November is considered as a failure bearish breakout, a fake bearish breakout, and thereafter price action may reintegrate rather steeply back above the 200-day moving average, with the next resistance to watch out for at 23,665 on the intraday basis. So that's for the Germany 30. Onward next will be the major US stock indices. So like I explained, given that Nvidia managed to save the day and we start to see a strong bounce in the major US stock indices yesterday. So still recall that the US Wall Street 30 represents the Dow Jones Industrial Average. We have a neutrality stance, and also given this individual bullish divergence that's being seen on the hourly RSI, and now the RSI managed to break out above a horizontal resistance level at around the 50 neutrality level mark over here. So with this improving momentum in terms, or I would say that bullish momentum creeping back into the US Wall Street 30, at least in the near term, we'll flip to a bullish bias for today using 45,965 that was tested yesterday before bouncing as my short-term pivotal support level. First resistance level to watch will be this zone over here, which confluence with the 50-day moving average and as well as the former minor ascending channel support now turns into a pullback resistance previously from the low of 13th of October. So a breakout above 46,740 will improve the probability of the start of a new bullish impulsive upmove sequence towards the next intermediate resistance in first step at 47,020, maximum 47,330 for today. That will be that confluence with the 20-day moving average. Only a sudden bearish reversal and a push down below 45,965 will invalidate this recovery scenario on the US Wall Street 30 to see further weakness towards 45,485, 45,190 next, which is the 13th of October important minor swing low. Next up, the SPX 500. So the SPX 500 managed to bounce off as well. So using the first resistance level, which is my neutrality zone over yesterday at 6,674. So it broke above our upper neutrality zone, 6,675. So this will be my pullback level to watch out for, the intermediate pullback level. But pivotal support, I don't want to tighten it, be so tight at 6,675 at this moment, unless we have a clear break above 6,780, which correspond with the 20-day moving average, then I will tighten my pivotal support to 6,675. So I will use the short-term pivotal support at 6,590, which is my yesterday lower neutrality zone, flip to a bullish bias over here. Next resistance level to watch 6,780. All right, after now it's breaking above 6,720. So above 6,780 takes us higher towards 6,830, followed by the all-important level at 6,880, where previous rebound got rejected on the 12th of November. However, a bearish breakdown below 6,590 will invalidate this recovery scenario on the SPX 500 to see further weakness towards 6,540, 6,500, which is the all-important minor swing low area of 10th of October. All right, so that's for SPX. Lastly will be the Nasdaq 100. So the Nasdaq 100 also managed to bounce and cleared above the upper neutrality limit at 24,940 level, 24,800, and also reintegrate back above the 50-day moving average during today's Asia session as we are speaking. But since it can't clear above the 25,430 level, which is the 200-day move, the 20-day moving average, pardon me, I don't want to tighten my pivotal support to be so tight at 24,940 unless in today it managed to clear above 25,430. I will do so. So for now, I'll still use yesterday's lower neutrality limit as my short-term pivotal support zone, 24,390, 24,270 level. Flip to a bullish bias / recovery scenario today above 25,430, take us up to the key intermediate resistance level at 25,775, where previous rebound managed to be kept on since 12th of November and 6th of November, where it can break up to form a new bullish impulsive up move. So this resistance level very, very important for the boost. Once it cleared above this 25,775, potentially that whatever sentiment towards AI bubble fears will get negated based purely on a technical analysis perspective on how the price action react in the last 2 weeks. However, a price action breakdown below 24,390, 24,270, that would invalidate the bullish bias / recovery scenario to see a further weakness towards 24,000 and the 24,000 important level, which is the 10th of December swing low area. All right, so that's for the Nasdaq 100. Next up will be the commodities market over here. So the commodity market, let us start with the gold XAU / USD. So for gold, it managed to see further weakness as it's trying to actually play around the 20-day moving average. So yesterday it did a bit of whipsaw around the 4,110 level over here. So a bit of excess, I would say, right? So a bit of excess here. So let me put it in writing. So let's store a bit of excess at 4,133. 4,133. All right, 4,133. Yeah, 4,133. Right, a bit of excess. So still maintain that bearish bias, given that the RSI managed to bang off this parallel descending trendline resistance, indicating the lack of upside momentum. And if you look at the current situation right now, is attempting to break down below this parallel ascending trendline support level. All right, so and the price action is rather lackluster as we are seeing right now. So with that, the excess that we have yesterday to 4,133, still maintain that bearish bias. First intermediate support level to watch will be 3,980, very close to the psychological level of 4,000, and that also corresponds to the 50-day moving average. A breakdown below 3,980 expose further weakness in first step towards the 28th of October minus swing low area at 38.95, 38.64. Only a breakout above 4,133 will see a retest at 4,155. A push up above it will see a further squeeze up towards 4,203 and even 4,267 next. So that's for gold XAU / USD. Still maintain that bearish bias towards 3,980 in the first step. All right. Now, lastly, will be the West Texas crude oil. So the West Texas crude oil continues to weaken as expected on the hourly time frame. So we recall that yesterday we're looking for it to push down towards 58.70. So it almost hit 58.70 during the US session, printed a low of 58.80 before staging a minor bounce. So with that, since it hasn't broken down below 58.70, I do not want to tighten my pivotal resistance level to be so tight at the 60.40, which is the 20-day moving average right now. So I will use any bounce heading towards 60.40 to flip to a bearish bias as it trade into this complex minor sideways range configuration, maintaining the short-term pivotal resistance zone at 61.30 / 61.70, which will correspond to the 50-day moving average. A breakdown below 58.70 that will allows me to tighten my short-term pivotal resistance to 60.40 and see further weakness towards 57.90 in first step, followed by the minus range support level of 17th of October and 21st of October at 56.80. Only a bullish breakout above 61.70 will invalidate the bearish bias view to see a squeeze up to revisit the 24th of October swing high area at 63 figure level. All right, so that sum up all the intraday technical outlook on all the broad-based cross asset classes. So before we go, let's have a quick look at the economic calendar. What are the other key data to look out for today for the period of Thursday, 20th of November. So on 20th of November over here, we do have there's no important European and UK data to take note of, other than where at the start of the before the start of the US session at 9:30 p.m. you see the release of the delayed non-farm payroll data for September at the unemployment rate, which is coming out at 9:30 p.m. Singapore time. So consensus is expecting a slight uptick of the non-farm payroll data, increment of 50k jobs added, and the unemployment rate remains the same at 4.3%. So if we start to see a rather low lackluster number that came in below 50, or was still below the previous sprint, August sprint of 22k job added, that could actually see a jump in the Fed rate cut back again for the December meeting. So something to take note of at 9:30 p.m. Singapore time. Then thereafter, we do have one Federal Reserve official speaking at 9:45 p.m. Fed Hammond will be speaking, and this initial jobless claim, they will not be released. And another official Fed cook will be speaking at 12 a.m. Singapore time, followed by 2:40 a.m. Fed Gooseby will be speaking. So do take a look at Fed Gooseby, because Fed Gooseby, he tends to be more of a neutrality side, but in fact skewing slightly more hawkish right now, given the fact that the previous speech from Fed Gooseby has been earring towards so-called sticky inflation. So it will be very interesting to see what his view right now, and also given after the release of that delayed September non-farm payroll data. So that will be at 2:40 a.m. Singapore time. And before we start our daily dose tomorrow at 7:30 a.m., we have the core inflation rate and core inflation rate that excluding food energy for Japan. So that would be rather interesting to see will we start to see a pullback in the dollar yen, especially as it fast approach a key resistance level at 158.30 that I mentioned earlier. Given the fact that market consensus for the core inflation rate to come in higher than the previous print of 2.9% at 3%, and also trading economics forecast the core inflation rate that's exclude food and energy to come in at slightly higher from the previous print of 3% at 3.1%. So if this print came in with expectation or higher than expected, that will indicate that the inflation trend in Japan continues to remain firmly above that long-term 2% target. So potentially that could see a bit of a pullback in the dollar yen if such scenario materializes. So that will be at 7:30 a.m. Singapore time tomorrow. So with that sum up today's Daily Dose of Market Insights. I'm Kelvin here, signing off, and I wish you all a great day ahead. Thank you very much.